Hey everyone, welcome back to the channel where we decode the markets and simplify investing. Today's deep dive is on AMD, Advanced Micro Devices, one of the most exciting chip companies competing directly with Intel and Nvidia. In this video, we'll explore AMD's business model, financial performance, AI and data center growth, competitive moat, risks and valuations, ana- analyst expectations, and finally, should you consider AMD in your portfolio? Let's begin. What does AMD do? AMD is a global semiconductor leader. It designs and sells CPUs like Ryzen for PCs, GPUs like Radeon series, FPGAs and COSCs, system on chip, solutions for AI, data centers and embedded applications. Its revenue comes from four business segments: data center, CPUs, GPUs for servers; client, CPUs for PCs and laptops; gaming, graphic cards plus chips for PlayStation and Xbox; embedded, industrial, medical and more. They don't manufacture the chips themselves, they outsource them to TSMC, focusing on design and innovation. Second, Q1 2025 performance. AMD delivered a strong quarter, revenue 7.4 billion, up 36% year on year. Data center sales up 57%, client segment up by 68%, gaming revenue up by 28%. Why the spike? Massive demand for AI GPUs, Ryzen processors, and next-gen cloud computing chips. AMD is aggressively expanding its footprint in AI and HPC, high-performance computing, which we'll discuss soon. Key financials. Let's break down some fundamentals. Market cap $286 billion. TTM revenue $27.75 billion. Employees 28,000. Cash on hand $7.3 billion. Net debt 2.58 billion. That's net cash. Debt/equity 0.1, very low. Gross margin 53.6%. EBITDA margin 21.2%. Net profit margin 8%. Free cash flow margin 9.9%. This shows a healthy balance sheet, great cash flow, and enough resources to fuel innovation. Valuation multiples. AMD's stock is currently expensive, but let's understand why. P ratio TTM 125x. EV EBITDA 47.4. PFCF 104.1. Next 12 month NTM P/E 41.1. PEG ratio 6.2. This premium valuation reflects strong AI optimism and future growth pricing, not current earning strength. Economic moat. AMD has built a strong competitive moat. Counter positioning competes directly with Intel and Nvidia with unique performance focused offering. Process superiority, optimized design plus outsourced manufacturing to the best fabs. TSMC. Scale, high volume top tier clients improve margins and cash flows. This gives AMD a flexible and scalable structure to launch products faster than its competitors. Growth over time. AMD's revenue CAGR since 2025 has increased 22.2%. Operating income has grown consistently with it. Forward estimates 2025 to 2027 suggest this growth will continue, especially with the launch of new AI accelerators and server chips. EPS and free cash flow growth. EPS is expected to grow to $7.5 per share by 2027. Free cash flow slash share forecast $6.5 plus. The dip between 2022 to 23 was due to macro weakness and inventory corrections, but now recovery is underway. Major growth drivers. Let's talk about what will drive AMD forward. AI accelerators. M1300, M1400 to rival Nvidia's H100. Data center servers. EPYC CPUs gaining adoption. Client growth. Ryzen 8000 series CPUs for laptops and desktops. Gaming. Custom SoCs for PlayStation and Xbox. Embedded and auto. Expanding use cases. Full stack AI solutions. Hardware plus software integration. AI, data centers and edge computing will be massive revenue generators. Recent news. Latest highlights include AMD launching M1400 chips in late 2025, partnering with Microsoft Azure and Meta for AI solutions, hired more engineers for full stack AI platform, working on cloud native data center architectures, AI chips competition heating up. AMD wants market share from Nvidia. Risk factors. Risk factors include Intel and Nvidia competition. Both are innovating rapidly. China export restrictions. Estimated 700 million impact. Chip cycle risk. Industry is highly cyclical. Manufacturing delays. Rely on external fabs, TSMC. Security threats. Any CPU flaws can be damaged brand. While AMD is financially strong, these external and competitive risks are real. Analyst expectations. Average target price $155.96. EPS growth forecast. High double digits till 2027. NTM P 41.4x. Expensive, but analysts are betting on strong forward growth. In short, Wall Street is bullish, but short-term volatility is expected due to valuation. Conclusion. So is MD a buy? Pros: strong revenue and product pipeline, high margin AI growth, expanding in data centers and embedded, financially sound and low debt. Cons: high valuation, competitive heat from Nvidia, cyclic industry risk. My view: AMD is a solid long-term play on AI and data centers, but it's best to buy on dips, not chase at the top. If you enjoyed this video deep dive on AMD, hit the like button, subscribe to the channel for more investing insights. Drop your thoughts on AMD in the comment below. Are you buying or waiting? Thanks for watching, and as always, invest smart, stay curious, and keep learning.